While the mainstream media is obsessing over the ceasefire expiry in 24 hours, a technological black swan just landed in the silver market that is mathematically more significant than any war. Right now, on Tuesday, April 21st, 2026, silver is trading at $80.13, but the real industrial value of this metal just underwent a total repricing. Samsung SDI has officially confirmed the production specifications for their new 1 kilogram solid-state battery, and it contains a secret that the Silver Institute hasn't fully modeled yet. A silver-carbon AgC anode layer that requires up to 40 grams of silver per kilowatt hour. This single breakthrough doesn't just increase demand, it effectively breaks the silver market. We are looking at an additional 562 million ounces of annual demand entering a market that only produces 813 million ounces a year. This is the industrial endgame for silver, and it's happening right now. To understand why this Samsung secret is so explosive, you have to look at the chemistry. Conventional lithium-ion batteries use graphite anodes, which are reaching their physical limits. Samsung's 1 kilo solid-state prototype, which delivers 500 watt-hours per kilogram, utilizes a thin silver-carbon layer to solve the dendrite problem, the tiny spikes that cause battery fires. Silver's unique electrical conductivity and its ability to prevent lithium metal from forming unevenly during fast charging make it the only viable material for the next generation of high-density EV batteries. This isn't a lab experiment anymore. Samsung has confirmed their 2027 production path, and they are already competing with central banks to secure physical supply. This Tuesday, April 21st, as you watch silver hover near $80, you are witnessing the birth of a new silver standard for the entire automotive industry. Let's do the brutal arithmetic that the banks don't want you to see. A standard premium electric vehicle with a 100 kilowatt battery pack will now require approximately 3 to 4 kilograms of silver. At today's prices, that is $250 to $320 of silver per car. If solid-state batteries capture just 10% of the global automotive market, roughly 8 million vehicles a year, that creates 800 million to 1 billion ounces of new silver demand. Remember, the total global mine supply is currently flat at 813 million ounces. We are talking about a single technology consuming the entire world's mine production. This is the structural reason why the Shanghai Gold Exchange is already paying $90.89 per ounce today, an $11 premium over New York. The East is pricing in the battery war, while the West is still trading paper futures. This technological demand shock is hitting a market that is already in total supply-side collapse. At 8:30 a.m. Eastern today, the Bureau of Labor Statistics released the March CPI report, confirming that headline inflation is at 3.3%. But the real shock was gasoline prices, which surged 21.2% in a single month, the largest monthly gasoline increase since 1967. This 60-year record in energy inflation has sent silver mining costs through the roof. Every 10% increase in oil adds roughly 8% to the all-in sustaining cost of silver. With oil at $95 today, the cost to produce an ounce of silver is skyrocketing at the exact same moment that Samsung is announcing massive new demand. This is the stagflation trap, confirmed in official data. 3.3% inflation with a downward revised 0.5% GDP growth. The system cannot produce more silver at $80 when the fuel to mine it is at 1967 level inflation. The supply chain is being severed right now. On March 11th to 12th, 2026, the U.S. Trade Representative launched Section 301 investigations targeting Mexico. Mexico produces 200 million ounces of silver per year, 25% of global supply. The public hearing is just 14 days away on May 5th. If Trump imposes tariffs on Mexican silver, 25% of the world's supply faces immediate trade disruption. Combine this with Russia's 40 million annual ounces being rerouted to China and India, and you have a supply desert in the West. The Samsung SDI battery plant in South Korea and the manufacturing hubs in China are already hoarding physical metal. This is why China imported an 8-year high of 206 tons in the first 2 months of 2026. They aren't waiting for the May 5th hearing. They are front-running the U.S. tariff bomb. While this happens, the leadership of the Federal Reserve is in total chaos. Kevin Warsh is testifying right now at 10 a.m. Eastern before the Senate Banking Committee. Warsh is the wealthiest man ever nominated for Fed chair, with personal assets up to $209 million. He is testifying while the sitting Fed chair, Jerome Powell, is under a criminal DOJ investigation. We have exactly 24 days until Powell's term ends on May 15th. In this leadership vacuum, the IMF issued a terminal warning this week. The explosion of U.S. debt is wiping out the safety premium of Treasury bonds. The U.S. is now paying $1 trillion a year in interest alone. When the IMF says Treasuries aren't safe, and the Fed nominee is busy divesting $100 million in assets, the global capital pool looks for a zero-risk alternative. That alternative is the physical silver that Samsung needs for its batteries. Look at the COMEX vault data for today, April 21st. Registered silver is at 76.88 million ounces. But the paper open interest for the May contract, which enters first notice day in 7 business days, is 235.2 million ounces. That is a 3-to-1 imbalance. The paper to physical ratio is 7.5 to 1. The Samsung secret makes this imbalance even more dangerous. Industrial giants like Samsung don't trade paper. They need registered metal. If Samsung or its competitors decide to take delivery of just 20 million ounces to secure their 2027 production line, the COMEX registered vault drops by 25% in a single week. We are watching a slow-motion bank run by industrial corporations that is being hidden by the $80 paper price. The real price is already $90.89 in Shanghai. The $11 gap between the East and West is the most significant arbitrage opportunity in the history of precious metals. The West is selling its seed corn, its industrial silver, at a discount to the East, which is using it to dominate the future of battery technology. This Tuesday, the Shanghai premium has widened to 14%. Every ounce that leaves a London or New York vault for Singapore or Shanghai is an ounce that is never coming back to the American or Canadian retail market. By the time the U.S. consumer realizes the Samsung secret, the metal will be priced in triple digits. The 24-hour clock on the U.S.-Iran ceasefire is the immediate trigger. It expires tomorrow night, Wednesday, April 22nd. Trump has stated a renewal is unlikely. If hostilities resume, oil doesn't just stay at $95. It gaps to $115 or $120. This will accelerate the 21.2% gasoline inflation even further. For the silver market, a renewed war means a massive spike in safe haven demand on top of the already explosive industrial demand from Samsung. At $80 an ounce, silver is the only asset that protects you from both a geopolitical collapse and an industrial revolution. It is the only dual-threat asset in the 2026 playbook. To the viewers who say this news is too long, consider this. We are tracking 20,000 stranded seafarers in the Persian Gulf, triple-digit shipping insurance rates, a 60-year gasoline inflation record, a $1 trillion debt interest payment, a criminal probe into the Fed chair, and a battery breakthrough that requires 500 million ounces of silver. If you want one-minute news, go to the mainstream media that is telling you everything is fine. If you want the hidden AG data that the banks are using to flip their positions, you stay right here. JP Morgan has already begun covering their shorts. According to leaked data from this morning, the commercial category is at its least short position in years. They see the Samsung demand. They see the 21.2% gas spike. They see the 13.4% COMEX coverage. They are getting out of the way of the train. For my Canadian stackers, the USD CAD at 1.39 and the Canada CPI drop today means the Bank of Canada is out of options. You're paying $111.20 for an ounce of silver today because the system error in the currency is already being priced in. The Royal Canadian Mint Maples and the PSLV Trust are seeing record demand because Canadians realize that holding a currency backed by a stagflation economy is financial suicide. The Samsung battery breakthrough is just the final nail in the coffin of cheap silver for the North American retail market. The Samsung secret isn't just about cars. It's about the total exhaustion of the above-ground silver supply. The 762 million ounce cumulative drain since 2021 has left the world's vaults in a critical state. On April 21st, 2026, the global silver deficit is no longer a forecast. It is an industrial reality. When you add 500 million ounces of solid-state battery demand to a market that is already 67 million ounces short, the math stops working at $80. It stops working at $100. It only starts to work when the price is high enough to force thrifting or secondary recycling, which analysts believe doesn't happen until we hit the $150 to $200 range. The ceasefire expires in less than 24 hours. The war hearing is happening right now. The May delivery cycle is 7 days away. The gas spike is at 1967 levels. And the Samsung battery just broke the silver market. You have exactly 1 day before the geopolitical trigger hits, and you have exactly 7 days before the COMEX delivery trap snaps. The $11 gap to Shanghai is your proof that the metal is worth more than the paper. I am the hidden AG. I'm monitoring the Samsung procurement data, the 21.2% gas spike, and the COMEX vault drain every single minute. The price is $80, but the data says $100 is the floor. If you want the truth that the mainstream is hiding, stay tuned to this channel. The era of cheap silver died today with the confirmation of the solid-state production line. Stack while you still have a paper price to buy from. See you in the next one.